Hello. Yeah, it's the last session of the day, and thank you so much for staying with us. And hopefully that you guys will continue to stay until the session end. Hello, everyone. Hello, our panelists. Today we'll have insights. Investor insights in AI and crypto, and from our panelists from the top VCs and the infrastructure provider. My name is Net. I'm your moderator. I'm from SCB 10X. We are a corporate venture capital of SCBX, which is one of the biggest and oldest bank in Thailand. And we invest across Web3 and AI. And let me introduce, let the panelists introduce yourself. Let's start with Spencer.
Sure, awesome. Hey, I'm Spencer. I'm at Theory Ventures. We're a $700 million asset manager. We invest in data, so data infrastructure, machine learning infrastructure, AI, and crypto.
Hello, Brad here. I'm head of Web3 and venture capital for AWS North America. We focus particularly on ensuring our customers and our startups have the tools and infrastructure in order to keep growing. Since 2013, we've deployed $6 billion of AWS Activate credits. That's a stat from last year, so it's only bigger, to help the ecosystem grow. Our whole premise is that we want to support builders early in their journey, give them the resources and tools to keep growing. We were the first hyperscale cloud provider to provide full account teams and solution architects to startups. The way we think about this is, who are the future enterprises of the world? They're startups. And that's why we put so many resources and so much emphasis on ensuring our startups have the best-in-class products. We work very closely with our investor partners. How it works is that they're able to provide a code, and that code is redeemable for credits, and then that's what they use to go and start building. For many of you, our team is all here, and we're very excited to meet the most interesting projects in the space building today. Thank you. Oh, we got to share microphones too. Very good.
I'm Joey from one of the partners at Founders Fund. We're a VC fund that invests across all sectors, including crypto, but I spend most of my time on the crypto side. And yeah, our model is pretty simple. We try to find really, really great founders who are doing stuff that's relatively 0 to 1, where there's some sort of kind of big technical differentiation, where there's something that you kind of believe about the world that's different. So that's us.
Hi everyone, I'm Anna. I'm at DCG, an investment lead. I'm driving our crypto and DEI investments. DCG was founded in 2015, and since then we have been investing in more than 250 crypto companies. We not just invest, we also incubate. So we are the parent company of Grayscale, Foundry, Luno, and 2 recently launched subsidiaries, Yuma and Fortitude. And I'm really excited for this panel.
Hi, I'm Greg Scanlon. I'm managing principal at Franklin Templeton Venture Capital Fund. We're focused entirely on blockchain. We're a part of the digital asset unit, so we've got 60 employees who are also focused entirely on blockchain. We've got venture, listed token strategy. We run nodes, and we also have a money market fund on chain. In terms of our venture fund, we focus on pre-seed up to Series A, and we are generalists in the space.
All right. And with the recent news, maybe I want to understand a bit more of your thought on the crypto market right now, from the shift of regulatory approach on digital asset and the Trump's executive orders, and also the speculative meme coins that happened earlier this year. So just want to know, Greg, your view on the crypto market and the trend that you see.
So I'm probably a little more bearish than I should be as a crypto investor. I view the innovation cycle within crypto and boom and bust as running, approximately 4 years. I think that we are in a golden age in terms of regulatory. Obviously, the shift in the U.S. Has been a significant improvement. And I think that when you look at how token prices have performed, particularly recently, obviously the most recent pullback has been extremely rough, but the momentum has come out of crypto tokens, since early January, where crypto tokens, Bitcoin, all the way down to Solana, stopped really reacting to headlines. And so long term, we are still obviously extremely positive on digital assets in general, starting with Bitcoin all the way down to high throughput L1s. But right now, I am concerned about this bull market, but it is an open discussion and a debate within our fund. We also have supporters of Bitcoin who follow the halving cycle quite closely and still expect the 175 in December at the end of this year. But again, we're in a golden age for crypto. The regulatory environment within the U.S. has never been better. We certainly expect regulatory bills and stable coins, SAB 121 already here. And then hopefully we get a market infrastructure bill by maybe in the next 12 months. And these will all be positive catalysts. I think the thing to really watch for, though, is stablecoin adoption in reality versus the hype that is likely built into the market. I think there's still significant infrastructure on the enterprise side that needs to come along in order for stablecoins to take off.
Yeah, hopefully see the adoption in institutions and also more builders in the space coming, right? And what about you, Joey? Want to know, from this, news and events that happen, is it impact your fund thesis?
No, definitely doesn't impact our thesis because our thesis is mostly just centered around evaluating founders. So it doesn't really matter what market regime you're in for that. I think, but I think when it comes to the public markets, I'm quite bullish here. I think if you look at kind of the catalysts over the next 6-ish months, you basically have. I think my personal view is I think the dollar's topped here. I think we're kind of at maximum fear when it comes to tariffs. And as those deals basically get negotiated over the next few months, I think that fear starts to get mitigated. You mentioned the market structure bill. I think that will be a positive for crypto and probably a positive narrative thing kind of closer to the end of the year. And then, I'm kind of a person in my personal account. I do a lot of trading, and I think if you look historically at the correlation and price action of crypto versus gold, in many cases, you actually don't see a massive crypto run for things like alts until after gold is topped. And gold's been on a massive run, over the last year. Although this morning I just sold all my gold, so I think gold is topped here as well.
All right. And any one of you has any other thing to add?
Absolutely. I'm going to follow up the second part of that where you mentioned the executive order piece. And I think every founder, every builder, everyone in our ecosystem needs to recognize this is our time. We finally have the pieces. If we were to just go back in our time machine and look at what we have now in place to go build from an administration perspective, from people that understand this technology and can actually offer opinions and insights. If you start looking at the different government agencies as well. So how we perceive this is it is a motivational time. We need to build. We need to build things that people actually care about. This is not incremental innovation of an L1 or an L2. I believe many of the folks here have funded the infrastructure that's going to get us there. What we need is to take advantage and recognize what are the products people want to use, what are the real world applications we're solving, and if we peel away all the words that we use to describe our thing, how is this impacting our data life? Do people love the products and the experience they're getting? And that's how we think about how we're going to move forward and the motivation we're getting.
And that's going to be my next question. As I see that AI and crypto is one of the key themes for this year and even from last year. And, crypto and Web3 can help enhance open source AI in terms of ownership, privacy and fair distribution. So just want to know, like, what's the use case or the verticals in AI crypto that you excite the most? Maybe start from you, Spencer.
Yeah, sure. Kind of, so like a general framework I think about the market in terms of like large language models and disrupting businesses. I think the framework I use is if you look at trading volume in Wall Street, historically a lot of trading volume was like deep value investing, and then it eventually moved over time to algorithmic trading. I think similarly, enterprises will all be model-driven businesses. And when I'm thinking about the role that crypto could play in that, I think there's a couple of interesting things. I think probably, especially from a government perspective, you want confidential compute. So I want to know that the software that I run every single day hasn't been altered when I log back into my account the next day. Or the model that I'm running locally isn't exposing any sensitive data that I have. And I think crypto and blockchain could play a role in that. Currently, when you look at the market and the intersection of the two, there's been a lot of innovation around like decentralized training and fine tuning, but for the most part, I'm not sure if there's a ton of demand for like another foundation model that's built in a decentralized way. I think hyperscalers or the large foundation model labs have a pretty big edge here. What I do think happens is I think the frontier model providers eventually all of their best models will not be open source, and they'll probably start to productionize those models and turn them into applications over time. Open AI is starting to do this. You have like some UI components that you can play with. There's like some prompt engineering you can do. And I think eventually you might have like a lower grade model that's open source. And so maybe there's a place where crypto and AI, you could train like an open source model using decentralized infrastructure. DeepMind's released a pretty interesting paper with DLoco. You can now update the weights of a model and the parameters asynchronously, which is like a huge deal instead of having to stop the entire training job, update the parameters, and then resume training. I think to answer the question very directly, there's two areas that AI and crypto kind of intersect today. I think you're seeing a lot of people who are interested in like agents that can handle tasks on your behalf. I think if you look at intents, where a user might want to execute a trade and they don't really care how that trade is executed, you probably have agentic infrastructure that's searching for the best routes to complete that order. And I think that could be very like algorithmic, and a model could actually be the one that's routing that order on your behalf to find the best liquidity, et cetera. That's one area. I think the other area that's kind of interesting is data labeling in general has kind of hit a threshold. Scale AI and other companies are manually tagging images, literally drawing circles around images. Over time, that's not really scalable. I think you'll probably need models that are actually verifying images, and then humans are just like checking, because the rate at which these labs are ingesting data is astronomical, and there needs to be like some sort of gamification. So I know there's a couple companies that do like data labeling using crypto incentives and micro payments. So I think those are two kind of interesting areas I've been spending some time on. I'll stop there.
All right.
I think we are excited about different layers of the stack, mostly about the training and the data layer. So on the training layer, we have seen interesting companies, Pluralis, Genzim, Prime, all using different approaches for incentivizing compute and high quality model contributors. And on the other hand, on the data front, we did a couple of bets as well. I would love to see more. I think we have acquired many data marketplaces, but would love to see more on the data curation, labeling, as you mentioned, and verification front. And there is another segment that we're actively looking at is robotics and AI. We just had a panel on it with OpenMind and Casey. So that's another segment that if you guys are building in the space, we would love to chat.
Yeah, the only thing I would add, I think I think some of the kind of decentralized training and decentralized inference stuff is interesting at like a certain large enough scale, which is, if you look at kind of some of the mainstream like AI companies, a lot of them have plans to use like nuclear power to build data centers, and I'm actually pretty bearish on nuclear over a short time horizon. I just think it's always way harder than it looks. It's always farther away than it looks, and it's always a huge amount of red tape and permitting. And I think Trump's going to improve some of that, but it's impossible to change all of the local permitting stuff. And so if you look at it from that lens, eventually to train large enough models, in my view, you basically have to solve distributed training. And historically, a lot of the kind of AI companies have kind of written that off. And so I think there will actually be some crypto-based companies that solve that problem, in my view. And then the other thing that makes that interesting is a lot of the kind of like companies that have spun up offering bespoke AI training like services and inference services are basically like brokers. They're not markets, and so they wrap things like AWS, or they wrap other businesses, and they add like a crazy premium on top of everything. And so I think as compute gets more commoditized, I think it'll start to trade more like a commodity. At least when it comes to things where there's massive amounts of commodity like demand, which is like if you look at like the training runs, they're basically like if you're doing a training run, you always want to run it for the most part on like whatever the state of the art NVIDIA hardware that it is that year. There's obviously some edge cases where you don't want to, but there's like a reason why Elon is ordering these massive orders from NVIDIA. And then outside of the training thing, I think the other interesting area is like not like the memeified AI agent stuff, but like very basic AI agents. Like we invested in a company, it's still in stealth, but it basically is a simple kind of English first AI agent that lets you like trade on currently centralized exchanges and eventually decentralized ones. And it's doing like $1 million in revenue a month. And so I think for certain things, like I doubt even most of the users know it's an AI agent like software architecture behind it. It's just an easy way for them to trade where they don't have to manually enter everything. And if you think about it, if you're a trader that's like a news-driven trader, speed matters a lot. And unless you're like a really expensive quant fund who has a ton of infrastructure, if you're just a retail trader, being able to kind of automate a lot of that and just like type exactly what you want and have it executed on the exchange is much faster than like opening a tab to like Binance or Bybit or whatever, and then manually entering your order. And by the time you do that, probably most of the alpha is gone. And so I think there's some interesting kind of low-hanging fruit agent use cases that aren't like what you see the massive hype around, but actually people do want them.
Yeah, I agree on niche models. It's one thing that we've been thinking about, and part of that is driven by the fact that over the years, I'm old enough to remember when Netflix didn't open competition for their recommendation engine because they are, particularly kind of annoying and difficult models to work with low signal noise ratios, and so. The unfortunate thing about that is that the winning team only got $1 million, right? And Netflix is a multi-billion-dollar company, and so to the point of why we think about companies like Sentient, who kind of in a way act as a platform or a broker, is because historically us mathematicians and engineers have not been the best at maintaining price advantage and commoditizing our work. But so niche and difficult models, certainly as we move through the phase of these very large centralized LLMs being the main driver of innovation, and also principally we're super interested in alignment, to the point of privacy of data, particularly on an enterprise level, right? Knowing that your data is staying where it's supposed to stay and that the model is doing what it's supposed to do and being able to evaluate that to the best of your abilities, right? We think that open source with blockchain provides, particularly interesting platform to create an optimal environment for alignment that enterprises want immediately. And we think longer term, retail regular users like ourselves, as these niche models become more ingrained in our lives, and we're offering up, free personal data of where we live so that it can open your garage as soon as you're getting close and turn on your lights and things like this. The convenience along, with like using a centralized exchange, but all these niche models they will require a certain amount of PII, and so we think that long term, all of us will care about that alignment and control.
Anything to add, Brad? All right. All right, my next question is about, when you evaluate these startups, what kind of attributes or qualities do you see in the startups when you want to invest in them or you want to support them? Maybe start with you, Brad.
Yeah, so we take a lot of signal from our VC partners. We also look at the track record, the founding team, and ultimately what they're building, right? For us, we want to identify who is building hyperscale applications and make sure they have the tools and resources to keep growing and scaling on AWS. We have over 280,000 startup customers, right? So for us, it is both about ensuring the two coders in a hoodie in a garage are building on AWS, that same level of tooling, and also some of the largest now enterprises of the world, which began as startups. And as they continue to grow and need different resources, we support them at every step of the way with that journey. All sorts of different programs, from CEO education to CRO, CTO programs, to co-sell enablement, to technical workshops, right? And we map all of the different programs along the startup journey from growth through scale. So that's why we have over 4,500 providers. So those are ones that can issue credits to their portfolio companies or participants. And that is how we look for signal in a very large market.
Got it. What about at Theory Venture?
Yeah, Joey said something actually in the intro that was like one of our slogans, which is like technical discontinuity or some sort of unique insight into a market. And so usually we're looking for founders who are obsessing on some specific vertical. When you spend every waking minute thinking about a problem, you usually have some sort of like go-to-market advantage. And I think that's really important because the cost of acquiring a customer over the last 10 years has gone up like 500, 600x or something. It's very difficult to acquire customers now. And so you need to have an initial wedge into a market. And usually I think what we're looking for is some sort of technical insight. So that's like the primary thing that we're looking for. Yeah.
All right. What about you, Anna? Just want to know your ideal teams. What was your ideal teams like, and what team to avoid?
Yes, we are investing mostly at pre-seed seed stage first. So team is, of course, like the most important factor. And we mainly only invest in teams that have both AI and crypto talent, which is very rare. So on the one hand, we want to have at least somebody in the co-founding team with strong ML expertise, both for the tech as well as to attract other ML talent later onwards. And on the other hand, we want someone who understands crypto incentives. So we have seen a lot of teams only with crypto talent only, or just pure Web2 ML talent without understanding tokenomics. So that's something for us, that's the most important, to have like complementary teams. And of course, like all the other factors that the rest of the panelists mentioned.
Anything you want to add?
I'm going to say basically the same thing as everybody else, right? You have to have the technical skills to do it. And we're also looking for you to think about whatever product that you're attacking. We want you to think about it in a completely different way than it currently exists in the world.
Yeah. And for crypto and AI, like tokens right now, right? There's a lot of projects like AI agent tokens that price very volatile, and 90% of them doesn't make it past 2 weeks. So what's your take on that? Like, how do you value your project, your startups before you make an investment? Maybe start with Spencer. Sorry.
Yeah, kind of like two different frameworks. So if you're investing in liquid tokens, obviously there's certain thresholds. You can only invest in tokens with a certain market cap so that you can actually get in and out of a position, right? So a lot of hedge funds or trading firms usually don't want to be more than 10% of daily volume. On the venture side, which we're typically doing venture investments, valuing a company, was that the question? Was it kind of
Yeah, how do you value the company, especially like crypto AI?
Yeah.
Maybe pre-TGE.
Yeah. Kind of this is a kind of an interesting take. I think the market is very hungry for AI exposure, and in the public markets, it's kind of difficult to find AI exposure beyond NVIDIA, Microsoft, and a few other providers. And so I think one interesting thing that crypto and AI kind of offers, and certain token projects offer, is exposure to retail to AI at reasonable valuations or cheaper valuations than paying billions of dollars or trillions of dollars in NVIDIA's case. So I think from a valuation perspective, it could be attractive for retail investors to get exposure to AI through tokens. I think that typical vesting for a startup is 4 years, and the reason for that was it used to take 4 years for a company to go public. And now, look at Stripe, look at these other companies, it's 10, 15 years sometimes before a company goes public, and it costs $15 to $20 million on average to take a company public. And so tokens offer kind of an opportunity for a company to issue tokens much earlier, and you get these liquidity events much sooner. So I think it's an interesting intersection, and the two kind of play nicely together, but that's generally kind of how I think about token exposure in AI and crypto.
Anything to add, Greg?
I think the reality is you have to view it as a relative valuation game. Otherwise, you probably won't end up participating. ML, AI, it is a foundational technology. It's optimizations upon data built by data. And so it can be integrated into anything and everything in your life. Just with blockchain, where you can view blockchain as being a seller of trust, and every interaction that any of us have at any given moment, it requires some level of trust. And so blockchain is also a foundational technology and product. And so in our view, you have to view it as on a relative valuation perspective, whether you're looking at the equity because of some of these AI valuations or the token. And the retail participation certainly plays a role in these relative values.
Yeah, I was looking at the multiples on revenue of some of the popular DEXs versus the SEXs, and they actually trade very similarly. And so I think over time, some of these things are starting to trade on a revenue multiple, and you can kind of apply a traditional framework to evaluating them.
For sure. And Solana has come down towards there as well. I think when you look broadly at the crypto token market, you get multiples anywhere from 20x on true financial services businesses, whether it's a DEX or Athena or Maker, all the way up to, Bitcoin still trades at something like 5 to 6,000x just on fees, and other L1s trade at 10,000x plus. But so retail is not aware of these things. But that is also why it needs to be thought of, in our view, at this point in the life cycle of tokens as a relative valuation game.
Anna, want to know what kind of metrics or measurement you have for your startups in terms of evaluating the performance?
I mean, I can just repeat the rest of them. Given we invest mostly pre-seed seed, it's very they don't really have traction at that stage, and we try to be valuation sensitive. But on the other hand, given we do both equity and token investments, we evaluate the metrics and generally the teams very differently. So we also have colleagues who are doing Web2 enterprise AI, Web2 fintech, and they are bringing pre-seed deals sub 20 mil to IC, while I'm bringing pre-seed deals at 50, 100 mil. So it's a different evaluation that we are making in terms of metrics. So what we are looking for, especially for those projects that we are launch protocol, is mostly strong network effects that they can achieve. So either to have a strong tech edge or network effects. In terms of metrics, again, when we invest, it's very hard for us to evaluate any performance metrics, because most of them either maybe have some kind of pre-sign up or pre-traction, but mostly it's just a team bet.
All right. For this question is about the market landscape and also supply demand on infrastructure side and the demand side on applications. So you see there's right now we see active development in decentralized AI infra, but we rarely see the powerful AI applications that attract high adoptions or like sustainable, tractions, or even from the enterprise use cases. So, how's your view on that? What is the problems underlying on this? Is it infra or is it on the application side, Brad?
Yeah, I'll start on this one. This event was a success today, and it's exactly where our community needs to be and building. But I'm going to give you some data points. HumanX, which is one of the largest AI conferences, there is no crypto, blockchain, Web3 presence, right? Jensen's about to have this big NVIDIA conference. I think there's one keynote or session. So my motivation to the ecosystem is recognize, yes, we have a lot of friendlies here who are all looking for the same thing, but I'm in a unique vantage point when I go into the office every day of hearing what my colleagues are talking about, how innovation is hitting them. And I hear every day about a cursor or a new AI tool or some incredible innovation that's jaw-dropping that is just captivating the audience. So whether it is how we talk about the incredible work that we're doing, the simplification of the applications, we need to recognize to play at that same level where we are getting towards adoption, we need to go out to the audience, to the world, to get out of our bubble. And yeah, these are some complicated products sometimes, but that's fine, right? When there's enough motivation or the product is interesting enough, people will learn it. So when I think about where we are in this cycle, there's so much opportunity because Web3 cares a lot about AI. Spicy take. AI, so far, outside of our world, not really caring about what we're doing. And as each of us who are committed to this ecosystem, believe in this technology, need to go out and recognize the contributions we make need to be so much magnified, like multiples bigger before we can achieve the level of adoption we hope to get to.
Thank you. And Joey, what's your take on this?
No, I mean, I totally agree with that. I think I think part of it is like the kind of whole crypto involvement with minus a few exceptions with AI is much earlier, along in its life cycle. And then I think the other aspect of crypto that makes it more complicated is like the infrastructure challenges with crypto are harder than, if you're building a Web2 startup. And so there probably is some like lag or lead time required to just get that stuff in place so that people can actually build interesting apps. But, that said, I think, if you look on the kind of application side of things, I'd like to see more people start to build stuff that's like involves crypto plus AI where it's useful today. I think you see a lot of people talk about like, in X number of years, AI agents are going to all use crypto for payments or whatever. And it's kind of just this like very forward-looking vision. But I think, as the example I gave with like the trading, agent thing example, there is stuff you can build today that users actually want. And A, the more of that, the better. And then B, I think as there is more of that, like the AI world outside of crypto will start to care about it more because they'll be like, oh, like that's weird. Like we just had an increase in API usage and it's like from this random startup that's using like crypto with AI. That's weird. But if you don't have that, then to your point, like they're not going to care. And so I think it sort of comes from like, we'd love to see more consumer stuff in crypto. That's not just like pumped up fun. There's no good way to combine AI with pumped up fun in my view. So I think that's something I'd like to see more of is kind of true consumer apps that use it more in the back end, but it's still really useful for users.
And I would just add here, look at BitTensor. Like many people look at BitTensor as infrastructure layer, but ultimately the subnets serve as the application layer. And some of the subnets have like real world use cases. So for instance, DP, they are developing a role-play LLM, and their application was number one at many of the Play Stores in different regions. Or you have Subnet 19. They are one of the best verification inference layers, and they are supporting many AI agents. Some of the subnets have trained more than 5 billion parameters. So we have like these first early protocols that now reaching product market fit. So while we might be still early, I think like a lot of application layers are just coming now.
Yeah, just quickly, I've seen 3 interesting applications within crypto already. I've seen like a cursor for crypto, so helping code smart contracts more quickly. A friend of mine's launching a company that lets you build any application using a prompt. So like end to end, I want to build a DEX or whatever. Obviously, you still have to build an application. I just think that Together AI started as a crypto company. It's a like $150 million revenue generating business that does model hosting. I do think there's an interesting overlap here, and we'll get more applications over time. Payment seems really obvious, order flow, stuff like that. But it does seem like we're starting to get like application specific blockchains, like Hyperliquid is really interesting, and I think we'll see AI applications over time. The interesting thing is like you're still using like a big foundation model for a lot of this for building an applications or a lot of this infrastructure. And so maybe you see an open source model that was trained, in a decentralized fashion, powering some of these things. But I actually think those like applications are coming sooner than people think.
What about you, Greg? You want to ask?
Agreed. On the payments and stablecoin side, I do think for crypto native companies, there are interesting applications that we're seeing built out and leveraged just for automations. So you're onboarding a Web2 user, the back end is in crypto, but now because you've got them all the onboarding all the way into payments on crypto, you can have them use a bot that is crypto native, and it can automate their payment behavior. And then in principle, we are super interested in, again, consumer apps, because thinking about payments without silos that currently exist kind of in the Web2 tech world, where you would have to link up multiple payment venues in order to compare products across a number of different companies. That's a space that, we're not necessarily seeing adoption, but we think is a significant opportunity for crypto just in terms of a competition, price transparency, and payment flexibility that isn't possible, we think, in the near term, next 2 to 4 years. And maybe that's too long. Maybe Amazon will disagree with that for the enterprise world.
We have a long view, so we recognize it's going to take time.
Yes, very insightful panel today. And anything that you want to, give the last note to the audience before we part today? You can start with.
You've been kind of inspiring.
Well, thank you. Yeah, absolutely. So I didn't bring credits, but I do have bags. If you get them on the way out. Listen, come find us, right? These people are here because they want to meet you, and we're here for the builders. I will go back and say, this is our opportunity to go build. We actually have the most ever venture capital dry powder that's ever existed. I think if you take away the 2 irrationally exuberant years, we're on track. Last year was the 3rd highest year. We're projected to be this is going to be that highest year. The venture capital money is ready for incredible founders. We are finally at a point where the infrastructure is ready. So when you look at these ingredients and the timing, right, to go back to kind of bring it all back together, regulatory environment, what we'll see, frameworks, and how it's going to work, it's our time. And we need to focus on building, spend time with each other, figure out the pieces that can help accelerate, and then go build incredible products that people want. This technology was meant to be used, and we should focus on that and figure out the absolute most incredible things people are looking for, and how can this technology do those incredible things around banking and payments, right, that we set out for it to do. And that's going to be a really exciting future.
Thank you so much, everyone. Have a wonderful night.